Hi, this is Eric Schleien. You're listening to the Intelligent Investing Podcast, and today we have on Luis Sanchez. Luis, welcome to the show.
Thank you, Eric. Thank you very much for having me here.
No, my pleasure. Now, where are you right now?
I am in Colombia,
Okay.
more specifically in Cartagena, which is in the Caribbean.
Okay, cool. How do you like it out there?
I love it. I actually live in Bogota, in the capital, but
Okay.
we came from here for a few weeks.
Is that where you're originally from?
No, here's my wife's family.
Okay. Where are you from?
I'm from a town nearby Bogota.
Okay. Got it.
The name is Villavicencio.
Say that again.
The name is Villavicencio.
I'm not even going to try to pronounce that, but it's a very, very beautiful, elegant name. So you are a net investor, and
Yeah.
wanted to spend some time talking about net stocks, net investing today. I think it's a very interesting topic. We've covered it a little bit on the show. We've done a few nets, but I wanted to get a bit more on it. So I found you and thought it'd be great to connect. So, I appreciate you being on. So tell the listeners a little bit about, who you are and your background and how you got into investing in nets.
Yeah. Well, my background is in law. I'm a lawyer, actually, and I actually practice law, I guess, half of my time. And so I studied law, and just after I graduated, I realized that I was interested in business as well.
What kind of lawyer are you?
I'm in commercial law.
Okay.
Yep. So I ended up finding this master. It was an online master's degree in value investing, which it was actually an online course in Spain.
Oh wow.
So I said, well, I can work here as a lawyer and still do this. I got hooked immediately. I just read a few lines about investing, and I said, wow, this makes a lot of sense. So I said, well, I can try to study that, and if I'm actually good at that, I don't have to travel to Spain. I could do it online. That was before this whole thing about online studying. And so I worked and I studied value investing, and I really got very, very interested and started studying a lot about it. And since then, I've been just working as a lawyer and on the side doing value investing. Actually started investing with my own money around 2.5 years ago. And before that, I invested in value investing funds. But it wasn't only until I met or I found this website called Net Hunter, which is run by Evan Bleecker, where I actually realized that I could do some investing myself with something I felt comfortable doing, which was nets. So
Evan's a great guy. I've had him on the show before.
Oh, okay, great.
Yeah.
So so I started. I became a member on Net Hunter, and started writing some. Yeah, I was gonna talk about that book actually. Yeah, that's the best. Evan's book is the best book about nets you can find.
It was
actually
great. It was a great book. I loved it.
Oh yeah, it was published last month maybe.
Yeah, it was recent, very recent.
Very recent, yeah. So it was like finding out about nets. I had read about nets.
Also, for those listening that aren't watching on YouTube, I would just grab the book from my bookcase right now. It's called. Just gonna give a plug out to Evan because he's such a wonderful human being. It's called Benjamin Graham's Net Stock Strategy, by Evan Bleeker. The best go-to person if you are serious about implementing Graham's net strategy for yourself. The secrets of Buffett-style cigar butt investing, a practical guide to successful deep value investing in today's market. So guys, you have not gotten this book, highly, highly recommend it. Go out, buy it, go online, get it. Okay, anyway.
That's right.
Yes.
I mean, Evan actually...
I didn't get paid to say that, by the way, either.
So he actually, his website opened my eyes, because before that I understood value investing, but I was trying to follow, I don't know, maybe Buffett, current
Warren Buffett, right?
Yeah. So, but when I started studying companies, like when I started this, I was like, well, but how do I know this is cheap? I mean, I may find a moat here and a competitive advantage, but there's just so many analysts covering, I don't know, Western Union or, I don't know, very big companies that I said, I mean, I don't know if I'm paying too much or too little. I don't know.
It's certainly tougher when you're dealing with companies where there's more people looking at it, for sure.
For sure. So, and nets are usually companies that are very small, very like micro caps, and forgotten, and no analyst coverage whatsoever.
Yeah.
So that's where, so Evan actually helped me find that. Well, that's where you can actually find things that are cheap or very, very cheap. So I started. So, well, that's when I realized I could actually invest by myself, and I have a portfolio of nets basically. So I guess that's going to my strategy would be, I'm a net investor, right? But not the 100% of my portfolios are not in nets. As much as that would be interesting to do, I still believe that I have around 60 or 70% in nets, and the rest is what I call concentrated bets.
Yeah.
Which that would be trying to emulate early Buffett.
Mm-hmm.
In his partnerships. He actually had what he called generals, which were generally undervalued companies, mostly nets, and then some of them became very big positions for him, and he actually wrote there that when he had this high probability insights, he just bet heavily there.
Yeah.
That's the difference with his mentor Graham, right? Graham just believed in buying hundreds of nets, and that's it.
Yeah.
So, that's my background, I guess.
Cool. And, how do you approach net investing? Because everyone does it a little bit differently.
Yeah. Well, net investing, I guess there's two big different ways to approach it. One is to be very diversified, broadly diversified, and the other one is to concentrate a lot.
Right.
I believe Evan is a very concentrated.
He's pretty concentrated, yeah.
Yeah, so I guess he mentioned he has like 8 or 10.
Something like that, yeah.
At a time. That's just too scary for me. So with nets, right? So I have around 30 or 35 nets. If I can have more, I don't have a problem with that. Yeah. So that's two approaches, and to be concentrated, I guess you need to have a more qualitative insight into the business, and if you don't want to or can't or don't have the information to know the business like very in depth, you should just diversify a lot. And I would say I'm towards diversifying more, but I don't
Yeah.
have 100 companies. I know net investors that have around 80 or 90. I have 35 or 40, I guess. That's enough.
Walter Schloss used to have like 100 stocks at a time.
Like 100.
Yeah.
I believe with time that could happen if, say, you end up like after you double, you can just sell half of your position and keep the rest. So if you do that for 10 years with a lot of companies, you may end up having.
You don't think that would hurt returns doing it that way? Because the statistic is the longer you hold nets, this diversified portfolio, the worse the returns get. I mean, so you don't want to be holding these businesses for 3 to 5 years.
Yeah, well, you shouldn't unless there's something there that tells you that.
Yeah. What is your sell strategy?
Your
sell strategy. How do you look when you sell a net? What do you look for?
Yeah, selling, as everybody says, that selling is the hardest part.
It's really fucking hard. Yeah.
Yeah, because you will always either miss on a subsequent higher price or sell, maybe wait too long to sell.
Yeah.
So I would say Graham recommended owning for 1 or 2 years or 50 or 100% gain, whichever happens first. And that makes sense because
what do you mean 50 or 100% gain? If you have 100% gain, you're inevitably going to have a 50% gain. What do you mean by that?
Yeah, well, let's say tomorrow because these companies usually have very sudden spikes.
Mm-hmm.
So you could end up having 100%. In a very short time.
Yeah.
So if it's 100, just sell. But if it's 50, you can think about it and say, well, I could sell right now.
Right.
And don't even try to wait for the 100% gain.
Yeah.
So that usually happens with nets. They just have a huge spike, and then you just have to sell, and that's it.
Has that shown to produce better returns than, say, just holding for a year and then potentially capturing some of those nets that go up 1,000%? Yeah.
Well, actually, Evan covers that in his book. In some.
I know. That's why I'm asking.
But yeah, but the thing is, I'm not very keen on these back tests.
Yeah.
Right. So I know I know there's evidence of net investing working with a equally weighted portfolio, rebalanced once a year and stuff. But I'm not sure that being that such a mechanical approach to investing would just work per se, because my other approach to investing or to value investing comes from Nassim Taleb, and Nassim Taleb actually opened my eyes in a different way. Well, because when he says, well, past returns and back tests and stuff like that, they can give you a false idea of safety, right?
Sure, because the only back tests that people talk about are the ones that work.
Of course.
Yeah.
Yeah, and also because you will ignore what happens on the tail risk, which is where most of the worst returns could happen, and they're not accounted for in most of these backtests. So, so then I know that net investing works because you're actually buying a very cheap company, but not because of a backtest, but because it is actually buying very cheap.
Yeah.
That I would say that goes to say that I believe value investing is just buying something for less than it's worth, and nets are just like a good place to start
Sure.
to find inefficiencies, but you can make money in the market in many ways. So this is just one of them.
So you own a bunch of these. Let's go into like 2 or 3. I'd be interested in taking a little dive
Okay.
into this world. So tell us a few names that you're invested in and the story behind it.
Okay. A little, I guess, a disclaimer here.
Mm-hmm.
I guess I told you before that I don't like to discuss individual companies I own per se, because there's a kind of a dilemma here, because when you talk about a company,
I'm
you own,
not forcing you to talk about any specific
no,
one. But
no.
okay.
I'm just gonna let you know why
Sure.
I would do that. And okay, so it's when you talk about any investments you have, you may end up getting biased or more biased towards it. So you fall in love with your idea. The more you talk about it, the harder it is to accept later that you're wrong.
Mm-hmm.
And especially with netnets, which are on a diversified approach, you can't know for sure which of them will work, right?
Yeah.
So, but on the other hand, well, I try to follow Nassim Taleb in this as well. He says you have to have skin in the game. So you should only talk about the investments you have, and not about things you don't own. That's because if you're wrong, you are.
Did you read Skin in the Game?
Yeah.
Great book.
Anti-Fragile and Black Swan.
I love Skin in the Game. That was my favorite, actually.
Yeah, mine too. And because it's actually a very Skin in the Game has a lot of tort law discussed, and that's very interesting for me as a lawyer to see that from that perspective. It's very interesting.
Maybe another show we can talk about some of the principles from that book. As a lawyer, it might be interesting.
I'd love to. Yeah.
Cool. All right.
Of course, I would mention, I guess, a few companies, and well, before that, or maybe if you want to discuss that later, I consider a group of netnets to be a very robust strategy regarding, like, referring to Taleb's definition of robustness, anti-fragility, and fragility. I believe netnets as a group are a robust approach, but individually, some of them are anti-fragile, and I'll talk about this when I discuss individuals' investments. So I have a few examples. One of them is a company called Trilogy. It's a French company. I found it a year ago. I'm
going to just full disclosure. I actually own shares of that, and some of my clients own shares of that company. So just want to make that disclosure, and this is not a buy or sell recommendation.
Okay. Great.
And also, I think it's important with companies like this, you or I could buy or sell these at any time without any notice. So just because we're talking about them on the show doesn't mean that next week we're not going to sell.
Yeah.
Okay, I just want to put that out there. Do your own due diligence. Some of these are very thinly traded, and do not use market orders on anything. Yeah. With that out of the way, talk about this business.
Well, thank you for the heads up. So Trilogy, it's a French company I found a year ago, and the story behind that, it's very interesting. It's they basically sell tubular structures for few industries: aerospace, automobiles, and a few other industries. So it's a simple business, but something like 5 years ago, the company changed the CEO, or 6 years ago, I guess. And the founder and the first shareholder, he owns like 70%, I guess, of the company. He said, okay, he gave the CEO position to somebody else. I guess he wanted to retire. I don't know. I don't know him. I haven't talked to him. But okay. So the new CEO started to grow the company with debt and started new projects, but they didn't work out. But the interesting thing is that if some value funds, I'm not going to mention their names, but I remember some value funds, the ones that liked moats, started investing there because they thought it was a growth or moat company.
Yeah.
But it was very disappointing. Growth didn't work. The projects left the company with very high operating and financial leverage. And so the founder retook control of the company. He was appointed as CEO again. And he just said, I have a plan to deleverage the company and just go back to basics. And that was 2018. But I guess the market didn't believe that story anymore. I even found a French blog about stocks. I don't know the name, but
yeah.
Somebody said in 2019, beginning of the years, somebody wrote, this company isn't worth a dime in French. I don't remember exactly. And that's when I got very interested because I said, everybody hates that. So I read the annual the financial statements, and I said, well, it's selling for a little bit below net cash, and it's obviously below net current asset value. It's been deleveraging for a year because it had been deleveraging.
Yep.
Sales are going down. They've halved in the last 4 years. But the owner has skin in the game. So I guess that could either work, or if it doesn't, I'm still buying below liquidation value. So I guess it's a low probability of losing, and if we gain, it could be interesting. And so I bought last year. Then at the end of 2019, it was working very good. And then, of course, COVID came, and they had to close for 2 months production. So I said, well, let's see what happens. The price came back to my cost, maybe more. And so I just waited. I'm still waiting there. I could wait for 1 more year or something like that. And I still believe that if it recovers a little bit, it could be I could have a nice gain. But if it doesn't work, I wouldn't lose that much.
Yeah.
And actually, they just published information. The first half of 2020 was a bad half of the year, right? They didn't have good sales, but they have an order. But they mentioned that because of COVID and the crisis, many competitors had to shut down. So competition is now less. And that's one of the reasons these netnets can be individually considered, can be anti-fragile. They benefit.
Yeah.
They could benefit from disorder and from volatility because they have so low debt levels that during a crisis they are more capable of surviving than companies with high leverage. And most netnets have very low financial debt because, well, if they have a positive net current asset value, that means they have current assets are higher than total liabilities. So
yeah.
So that's Trilogy, and of course, as with all netnets, it could be one of those that don't work.
Sure.
If they work, they will be a nice gain. Yeah.
And let's do 2 more.
Well, 2 more. But I can talk about one that I sold last month, maybe. Yeah.
Okay. Sure.
2 weeks ago, maybe. It was a company named Ref Holdings in Hong Kong Stock Exchange.
Mm-hmm.
I bought
What is it called?
Ref Holdings.
Okay.
REF Holdings. Also very microcap, a small company. It was selling for, I bought maybe for 50 cents a share, and it had around 70 or 60 cents per share of net cash or something like that.
Okay.
I bought
So you bought it below net cash.
Yeah.
Got it.
So, their business. It was founded in 2013 or 14 something. Very large insider ownership. The founder owns like, I don't know, 40 or 50%. And they basically, what they do is they sell companies in the Hong Kong Stock Exchange have to file with the authority there, file their filings and in their IPOs or after the IPO. So their service is to print the filings and translate them from Chinese Mandarin to English and so forth. So it's a very simple business.
Yeah.
So I bought below net cash, and right now, and they hadn't paid a dividend since the IPO. But since COVID hit, the business may be in trouble because I guess Hong Kong Stock Exchange is thinking about, but it hasn't actually done it. They want to go to make these filings digital.
Okay.
They don't want to print, but that hasn't been done yet. So I don't know the reason, but the company decided to pay a special dividend, and in a few weeks the price just went to the price of net cash. So I just sold there.
Okay.
So it's this kind of thing that happens with netnets. You don't know where or how or when or why it will just have a spike, but
Just
it does.
You have a spike.
So yeah, I just.
So Ben Graham called them cigar butts.
That's why, yeah.
The last puff.
He called them that. That last puff you find on the street, that's disgusting. I mean,
yeah,
it's whatever you want to call it, but it's still free. So, yes. And yeah, I guess that would be.
All right. And what's one more that you currently own? That's an interesting.
I currently own support.com.
Also, for full disclosure, I own that, and some of my clients own that as well.
Oh, okay.
Not a buy and sell recommendation, and the exact same shit I said before. Anyway, go ahead.
Okay, same here.
I'm having a guest on who's naming my entire portfolio.
Well, I'm glad to hear that. So yeah, well, support was interesting too. So yeah,
in about I think in 3 years, I've maybe talked about probably as many positions in the last 20 minutes as I've talked about in the last 3 years. So congratulations. Wow. Anyway, go ahead.
Okay. I can do another one.
No. Support.com is fine.
Okay. So support.com, I bought last year, June maybe.
Mm-hmm.
And it was also below net cash, maybe half.
It was really cheap.
It was really cheap.
Yeah.
And so, well, I studied the company. It's also a very simple business model, and I believe the board they have skin in the game. They own a large part of the company.
Yep.
But there was some activism last year with, and so they ended up paying a special dividend in December, which was great. I mean, it was like $1 a share, and I bought for 140. So just with the dividend, it was a nice gain. But after the dividend, it was very deeply undervalued after the dividend.
I bought it right after the dividend.
Okay, so I bought more after that, and with COVID, it benefited because they are basically a call center for support. So people, I guess, needed more
at-home tech support.
Tech support, right? And they also have a small venture in another small business. But that said, support is I still own. I've been selling for the last 3 months, but I still own some of that because I believe it has more future.
You think the company is going to get sold eventually?
I don't know.
Yeah.
I don't know. That's as I said, with NetNets, you don't know.
You never know.
You never know. You're just in a position where good things can happen. That's what Walter Schlott said.
Yes.
I remember he said in an interview and I quote, it was something like, the problem with my portfolios, with my companies, is they're very troubled and they're very ugly but if you own 20 or 30 of them, you're going to do very good because something good will happen eventually.
And it's almost like even if something less bad happens, you can make money.
Yeah. If something...
You don't need it to be that fantastic.
Yeah.
Just less bad.
Actually, I believe it was... Evan's writes that he may be NetNet investors. We are one of the few people that actually hope for the business to liquidate.
Yeah.
And
it's so fucked up to say, but it's true.
Yeah. So yeah, I guess that's why they are robust in aggregate.
No, it's very interesting.
But also they can, they can go to zero, and then
they can. There'll be a few.
Yeah.
Have you had a NetNet go to zero before?
Not yet, but
well, I've been doing this 15 years, and I have not had one go to zero. So there is hope.
No, really.
Yes.
But 99% at least.
I've never had one go to zero. No, I've never had one. I've had the worst that I've had is maybe, I don't want to put a number out there. I mean, I've had something go down, say 30, 40, 50%, but I've never had a zero.
Okay.
Yeah.
Oh, that's interesting. Yeah. I guess you. Well, actually.
Anyway, I don't want to talk about me, but can I go back to what you were saying?
No.
Yeah.
I was gonna say about that maybe he covers that in his book, but Evan mentions that. Buying a NetNet is by definition a company selling below net current asset value, but just buying below that value is not enough, right? You have to actually.
No, you know what? Hold on. I want to stand corrected. I have had a close to zero. I invested in a NetNet once that was Chinese, and it was a fraud. So the cash on the balance sheet wasn't real, if you can believe that one. They were faking their cash.
I can't believe that, and that's actually we try to avoid places.
That's why I avoid China now. And interestingly enough, statistically, if you exclude Chinese NetNets, the returns go up, backtesting wise. Which was interesting because I had always wondered, is the market, because obviously there's going to be some Chinese NetNets that are going to be frauds, actually quite a lot of them. And my question was, statistically, if you own a basket of Chinese NetNets, does that compensate for the risk that quite a few of them are going to go to zero? And the answer is no. It's actually, at least backtesting wise, markets have been pretty efficient that if you just exclude all Chinese NetNets as opposed to having a basket of Chinese NetNets, you do better without the basket of Chinese NetNets.
Well, makes sense, right?
Yeah. Well, it wasn't intuitive to me. I would have thought the opposite. Actually, if I didn't know the data, I would have thought the opposite. because I
that's
find
interesting.
I find markets tend to overreact to negative news, but in this case, so far historically, it's been efficient.
But that's true. I mean, the very few on the few companies that I've had reports of fraud
Yeah.
have been related to Chinese subsidiaries.
Let's say it's either a Chinese company or a Chinese subsidiary where you get these issues.
Yeah, that's
So
that's
it was actually a really interesting situation. It was called China Media Express, and they did advertising on according to the company, they did advertising on buses, and it was selling below net cash. The margins were significantly higher than all their competitors, and you'd go on their website. They had a list of all the companies that advertising for. One of them was Coca-Cola. So it was a little strange to me that this was trading so cheap. And I called Coca-Cola and I spoke to someone in their marketing department. And, they got, it was, I don't know if it was the head of marketing, but she got in touch with some Chinese subsidiary. I don't remember the entire thing. This was years ago. And she goes, we've never heard of the company, but we definitely don't do business. And she said, maybe it's one of the Chinese bottlers that is doing business with them or something like that. But it just seems sketchy. And then there was all these Seeking Alpha articles that started coming out. I started talking to the author, and the author goes out to China on a trip. Happens while he's in China is like, well, I'll check out the headquarters of this place. And he goes in, and it's a bunch of these employees, and they're playing pool. And he's like, I don't know what they're doing, but they're not doing anything. Wow. And that was the first warning sign. So I sold before it went to zero, but I lost a fuck ton of money on it.
Wow.
Yeah. If you Google China Media Express, you might be able to find some old Seeking Alpha articles. It's fascinating.
I'm going to.
Yeah.
Yeah, because I really like Munger says, tell me where I'm going to die so I don't go there. I want to read about it.
Yeah, if you want another really interesting fraud, this was also a net that I invested in. And this was the other one where I lost some money. I made money on this, but I should have lost money because it was also a fraud, but I made money on this fraud by accident. Because I'm thinking I didn't lose money on that. It was called IBSG International.
IBSG, where did it trade?
It was the United States. It was over the counter.
Okay.
Either NASDAQ or OTC. I don't remember. And the CEO was like doctor, blah, blah, blah. And he had conference calls, and they had a few businesses. One of them was they had some contract with the South African government, and it was trading at a discount to the receivables. But every quarter, the receivables would go up and free cash flow would be negative. And every conference call, the CEO said, oh, well, it's just the government's slow. It takes time to collect the receivables, whatever.
But they're going to pay.
They're going to pay. Right.
Yeah.
So just the net current asset value kept getting larger and larger, and the price was going nowhere. And this time I also did a little investigation. I called one of their clients, and it was some software company. I believe it was a software company. And they told me they never heard of the company. And then I sold immediately because I knew it was a fraud right there. So I wrote about it. I had a blog back then. I had a value investing blog years ago, when I was in high school. So this was, I want to say this was 2006. So I guess I was a freshman in college doing this. It was either 05 or 06. And also in Seeking Alpha, I believe, was it Seeking Alpha? No. I wrote a blog post. This is what happened. I wrote a blog post on it. You're not going to be able to find it because that blog's private now. But I wrote a blog post on it talking about my experience. The secretary for the CEO found my blog, and she emailed me. And she goes, I just want to let you know, I think you're onto something because we have not been paid in several weeks. And the CEO is missing. His kids are missing, and we think he fled to Africa.
Whoa.
Yeah.
Well,
And so it turned out he fled the country. The thing was a
Wow.
fraud. The company disappeared overnight. It went to zero overnight. A few weeks later, and then, years later, he started I think a new company, which was also a fraud, and he ended up going to him and his wife ended up going to jail. And the way they went to jail was, I think what happened was they avoided court by saying that he had cancer, or that his wife had cancer, but then turned out that he had forged the the health certificates. So there was no cancer. It was just to avoid court. So then they ended up going to jail for forgery as well, for forging legal documents. Yeah, it was a total mess.
He paid.
Yeah.
He had to pay for it. Okay.
So lots of interesting, weird stuff that goes on in this small space, which is where you got to be careful too.
Yeah, I was gonna say that. I mean, that's why you have to, what you say, do your due diligence, because you don't have too many friends in the financial business. I mean, there's a lot of people trying to take advantage.
Yeah.
So, that's a high risk. I mean, the fraud there, but there's also the risk of obviously dealing with very illiquid stocks.
Yeah,
right?
I mean, you're dealing with highly liquid companies. They're very small. I mean, generally, I think the most common things you'll see are like, weird, shady self-dealing with family members, or wives, or a loan on the balance sheet for $90,000, or weird stuff like that.
Yeah, so you have to do your homework,
or just be very, very diversified and call it a day. You can do that too. So, and it seems like you do a mix of both.
Yes, I do a mix of both, and I know someone who has a very diversified. Like he owns like 80 or 90 or even 100.
Yeah.
And when I talk to him and I mention these things, and I say, well, I don't know, the CEO seems a little sketchy, or maybe I don't know about these receivables. Yeah. And he says, what you're saying, he says, well, I own a very diversified basket because of that, and I don't want to know. I mean, if he spots a fraud, well, he'll just don't invest. But
there was one company I found, OTC. It was a few years ago, and I called the company because I couldn't figure out what they do, and I got in touch with the CEO. The guy sounded like he had dementia, like he had no idea what was going. He says he left me this voicemail back, was completely incoherent. I thought maybe there's a bad connection. I finally got a hold of him on his house phone, and it was not making any sense. And then he was like, "So, like, do you want to buy the company?" And the guy, I'm not making fun of someone with dementia. I mean, the guy was probably like in his 90s or 80s. I mean, the guy was really old. And he's like, "Do you want to buy the company?" I'm like, "Well, I don't know what the company does. What do you guys do?" I couldn't find any information on it. And he goes, "Well, we don't do anything right now. We're just looking to do something." I'm like, "Okay, well, like, do you have like a bank account?" And he's like, "Yeah." Like, "Well, what assets do you have? Like, do you have cash in the bank? Like, do you have like tax? Do you have NOLs? Like what's the deal?" He's like, "Oh no, we have nothing. We're just looking to do something. Do you want to do something with the company?" I'm like, dude, really? Wow. So weird.
Oh, that's why this is so interesting. I mean, you find
it's the Wild West.
Yeah, it's the Wild West. Yeah, it's the Wild West of investing.
Yeah, for sure.
Yeah. So, well, I find that very amusing and really. Yeah. It's it's a nice way to spend your time.
Yeah, I mean, for any of you who haven't dabbled in nets, do this for a few years. You'll definitely have some interesting, fun stories after a while.
Yeah.
Hopefully make some money along the way.
I'll let you know in a few years. I'll have more stories to tell. But
sounds good. All right, man. Well, it was good chatting with you. What are you up to the rest of the night?
Well, I will go out with my wife and take just walk around and I don't
Nice.
know, go find something to do.
Cool. All right, man. Well, it was good chatting with you, and
Too.
come on anytime.
Thank you very much.
You
Thank
got
you
it,
very
man.
much for having me here.
Of
Goodbye.
course. Take care.